All right. Thank you so much for joining us for our second session. Today's session, we will be discussing with various industry thought leaders some of the challenges around supply chain, around manufacturing, around deployment, utilities. So it's an exciting panel with the various experts in their field. So I'll quickly introduce everyone and then hand it over them to give a little bit of background. Myself, I'm Naeem Farooqi. I'm the Global Technical Director of Zero Emission Mobility here at Wood. Welcome to Woodhouse, COP26. So we're very excited to host everyone. My background, I've been in the transportation industry for 15 years, helping heavy-duty fleets decarbonize from buses to school buses to garbage trucks and street sweepers and mines. So excited. First off, we have Vincent Deval, the Executive Director of the Global Sustainability Electric Partnership. Beside him, we have Patrick Peter, the CEO of Circunomics. Then we have Deeana Ahmed, the Director of Strategy at ev.energy. Then Erik Nygard from KOFA, the CEO. And virtually joining us is Anthony Hadley from AMP Capital. Anthony, can you hear us okay?
I can, Naeem. Can you hear me?
Yeah, perfect. That's great. Yes. So we'll start off, Vincent, if you can give a background. I'll pass you the mic.
Thank you, Naeem. Good morning, everyone. Vincent Chedzeva. So yes, as Naeem said, Executive Director of GSEP. We are an alliance of some of the biggest utilities in the world. And we're focusing on how to decarbonize the grid and usage. So EVs, buildings, and as well industries. So pleasure to be here on this panel. I've been working for the past 20 years mainly in utilities, but also in electrification of transportation, both public and individual. So pleasure to be here.
Good morning, everybody. My name is Patrick Peter. I'm the CEO and co-founder of Circunomics. We're an urban mining company for batteries. So we take care of all of the 400 million tons of lithium-ion batteries that will be phased out by 2030. We give basically every battery that we receive a second life or recycling them according to the highest economical and ecological standards. We have facilities with our partners all over the world, so we can take back any electric vehicle battery, no matter where they end up. I have a background in supply chains. I did my PhD on circular supply chains, and before that, I did my master's in mathematics. So I'm kind of the nerd probably here on that in that round. And during my PhD, I got to visit the world's largest e-waste site, seeing firsthand where batteries end up today. And it is our mission at Circunomics to enable zero waste in the battery economy.
Good morning. My name is Deeana Ahmed. I'm from ev.energy. I lead strategy and government relations. We're a new battery startup, 14 months old, headquartered in Novi, Michigan. We're working to double range for consumer electric vehicles, but be mindful of the sustainability of our supply chains and focused on safety and cost for our end consumers. And my background is in academia and policy. I just finished my PhD at Columbia in neuroscience, so not in battery chemistry.
Do you want to go first? Me?
So my name is Erik, and I'm the founder and CEO of a company called KOFA. We are building out a portable battery network in sub-Saharan Africa. And these are multi-use case batteries, so they can go into motorcycles or be used in home for backup power. Our thought is that in a place like Africa where energy demand is on the rise, batteries really have an opportunity to almost replace the distribution grid whilst also solving transportation problems. And prior to this, I built a business here in the UK that was optimizing distributed energy assets like batteries, wind farms, solar farms that I sold to Shell in 2019. So some background.
Perfect. Anthony, do you want to go next?
Sure thing. Thanks, Naeem. Yeah, so look, my name is Anthony Hadley. I'm a principal in the infrastructure private equity division of AMP Capital. For those that are not familiar with AMP Capital, so we're we're an investment manager. We manage around 141 billion US dollars across a range of different asset classes. So traditional equities, fixed income, real estate, and infrastructure. As I mentioned, I'm in the infrastructure private equity division, and look, we target investments across power and renewables, telecommunications, and also transportation. Look, my background is originally from electrical engineering. I spent 4 or 5 years as an electrical engineer. Eventually moved across to mid-market M&A, and about nine years ago moved to EIP Capital. I head up the clean energy strategy for the Americas. I'm based in Southern California. And we made an interesting investment, just over a year ago now, which is a joint venture with NLX, which is targeting the investment and rollout of electric buses in Latin America. So EIP Capital is 80% shareholder in that joint venture, and we own what is, I believe, currently the largest operating fleet of electric buses in the Americas. So it's a fleet of just under 500 buses in Santiago, Chile. I'm looking to do a lot more in this space, and hopefully invest a lot more in this platform, given the really exciting growth prospects of this space.
That's great. Thank you so much, everyone, for joining us today. So why don't we kick off this discussion and talk about capital? So how can we use capital to enable this energy transition? And I think let's start with Vincent to give his perspective from the utility as well as the Global Sustainability Partnership.
I'm the one breaking the ice. So, well, all right. Financing. So from utility perspective, obviously EVs, it's kind of a dream because we'll be selling more electricity at the end of the day. But we do understand the role of utilities as to be enablers and to work with all cities, governments in order to facilitate this transition. And to facilitate this transition is for EVs, especially, it's all about the charging infrastructure. So the question is, how can utilities get involved in there? And there's different ways to do that. Rate base could be one solution. Some of our members are doing that. Hydro-Quebec, not to name it. And now also one of our members are pushing that clearly with their subsidiaries. So different ways to do that. And in California, I had the panel yesterday talking with utilities over there. They're pushing more make-readies and stuff like that. So it's not necessarily that we can pay for everything, but for sure utilities have a clear role in order to finance those infrastructure. And the way to do that is through collaboration. We need to create better links between cities, governments, and utilities so that we better understand ourselves, and then we can tackle the different challenges that come with those infrastructures. So that would be my take on it.
Patrick,
Yeah.
go ahead.
Well, so my take on financing is really really circled or centered around looking at the battery as an asset beyond its first life. So you can really squeeze out much more revenue out of the battery if you give it a second life. And also on top of that, mitigating the CO2 footprint significantly. If you look at the total carbon emissions of an electric vehicle, let's say the Volkswagen ID.3, as compared to an ICE, let's say the Volkswagen Golf diesel with the same size, you have the exact same carbon footprint. And there's just one relevant and realistic lever to mitigate that CO2 footprint, and it's by giving this battery a second life, keeping it in operation for a longer period of time. Could prove is that if we do that, we can mitigate the CO2 footprint of that specific ID.3 battery by 50%. And you can convert this also into carbon credits, which is highly relevant for the fleet of Volkswagen and any other automotive OEM.
Is this working? Okay. I echo what you both have just said, and I think it is absolutely about collaboration across many different sectors that maybe haven't talked previously. As a battery startup, one of the things that we're experiencing is the capital required to scale, and the capital required to establish more sustainable supply chains where we're leveraging new materials, we're working to bring new chemistries into the market. That requires a lot of capital. It also requires government incentives to scale the manufacturing. So on a policy level, there's collaboration that's required. But then on a clean energy perspective and in scaling manufacturing, it also is important to understand where we can set up new operations that can leverage clean energy sources to power that manufacturing. So it really is like a systems level conversation that needs to be had across utilities, across government, across startups, across OEMs to be able to drive this capital also in a sustainable way. Because if we do everything in silos, then we're arguably copying and pasting a lot of efforts. Leveraging partnerships like with what you are doing in order to understand that those minerals are still resources, they're natural resources. And we have to be very mindful of the way in which we are leveraging and using and replenishing the usability of those resources. It's phenomenal that there's been electric vehicles now for over a decade and there is adoption, but now it is the time for us to be very critical and to think about how are we going to decarbonize this entire process and make it sustainable so that we don't end up, again, depleting a natural resource and needing another opportunity for energy storage in 20, 30 years.
Thank you, Dee, for that. Yeah, there is no other planet B, so great points. Let's go over to Anthony and get his perspective as the capital guy on the panel.
Thanks, Naeem. Yeah, I was going to open up by saying it's a question that's close to my heart and resonates as given I'm kind of coming at this from an infrastructure private equity angle. But look, I guess what I'd say, and there's been a lot of chatter around COP26, I think, around the fact that capital is really, an enabler, or is a or the key enabler for the energy transition. I think much of the technologies that are going to, put us on the pathway we need to be already exist today. I think the impediments to getting us on a 1.5 degree Celsius pathway is actually kind of rolling those technologies out en masse and at scale. And the way to make that happen is obviously through capital efficient capital markets, and ensuring capital is available for the right projects to invest in this space. Infrastructure funds, just anecdotally, raised more than $100 billion last year. For people that know the space, the capital that's been chasing infrastructure investments over the last kind of decade or so, it's growing exponentially every year. And one of the more recent themes from, I guess, the institutional investment community is a very strong kind of appetite for green investments or investments that, check the ESG box, which everyone is trying to kind of get exposure to. So look, investments like, the one that I mentioned that we made last year into the electric bus space, look, that they are highly sought after on paper for funds such as ourselves. I think what's really important to mobilise that capital to make things happen and to get this investment that we sorely need to get us on this 1.5 degree pathway. Is projects that are and kind of market constructs that are well structured to enable that capital to be invested in the right projects. And look, I guess two examples I'd draw on to make this point is the markets in Santiago, Chile, and also the markets in Bogota, Colombia for electric buses. So I guess the procurement models in those markets are quite sophisticated, and without kind of boring everyone with too many details, the market to procure electric buses and charging infrastructure, etc., they're quite thoughtfully separated in terms of procurement of the infrastructure, which is a space that funds like ourselves are well equipped to play in and focus on, and very separately procurement of the operations of those electric buses, and transportation operators who are best placed to I guess play that game and run a capital light model and operations heavy model. Can focus on on that part of the value chain. These are quite advanced markets, and I guess structuring the market that way is a really good way to attract capital and to invest in large scale electric bus fleets. I think they're two market leaders, and I think the more markets throughout LATAM and the world generally that I guess structure their procurements thoughtfully in this way, are the markets that are going to kind of lead the charge in terms of the rollout of electric mobility and electric kind of public transportation mobility. So that's kind of my perspective on that question, Naeem. But yeah, thank you for asking it.
Thanks. Let's go over to Erik.
Yeah, I think I'll bring it from my perspective as trying to raise, I say, startup money. I've got a couple problems. One is I'm in Africa now. There is clearly lack of capital going down there. I think the appetite or understanding for the continent isn't quite there amongst kind of institutional investors yet. It needs to get there fast because there's a real opportunity to make a difference on the ground over there. I mean, it's a whole new landscape. But to do that now, you also need to have a longer term view. So I think it's hard if your incentives are on 5 to 10 years to be in and out, which generally is where the VC windows sit. You've got companies out there that are longer, but I think ultimately if the financial incentive is a core thing in the way we see it today, the market isn't really necessarily set up to deliver against it, is my view, because I think you need to go longer term. And it is changing. So a lot of funds going out there now are thinking longer, which is good. But on top of that, what is the incentive? Is it pure money returns, or are you actually trying to incentivize the carbon impact? And I think that's a tricky thing for any fund to decide on. Is it okay to run at a loss for 5 years and you've saved the planet, or is where do you put your ultimate metric of success for investments? Very difficult.
Yes, that's a great point, Erik. And I think when we're looking at this space from a capital standpoint, I've had the opportunity to work with NGOs that are trying to change the world and private capital. I don't know why, but the last 2 months I've met a lot of phenomenal VCs and investors and investment bankers, and the conversation from a person who deals primarily with fleets. It's very interesting how they're coming in and sort of looking at it at a simple way as a balance sheet exercise in some degrees. But there's such a human element. Vincent and me have spent time in Lima, Peru, and just going to their patio and seeing the transformation that we were causing, the excitement on the drivers' faces. How do we put that on a balance sheet? How do we quantify that? Like, how do we quantify that we had a line of 100 drivers wanting to drive the electric bus, right? It was phenomenal. As we're thinking about this, the supply chain is so critical, and I have tried to make this panel seating arrangement the same way, from the creation of the electricity from the utility to the battery packs where they're done, and the end consumers like KOFA. But I wanted to put Peter in the middle, because if we don't think about the second life, if we do not think about the minerals and the precious metals, we only have a finite resource of anything. So it is really important. So Patrick, I would love to hear your thoughts on how you think putting things like, I saw some stuff about chip on cell, how you think that's going to change and how you think that's so critical as we start building these massive, gigawatt factories producing batteries.
Yeah, thanks for the great intro again. So we are all aware of gigafactories being built everywhere in the world, right? So production is ramping up, which is great because batteries are needed in order to electrify mobility. In our experience, even the largest OEMs, they have no clue about where their batteries will end up at the end of life. We're working with one of the largest Korean OEM, and we're currently helping them to manage a very large product recall. So suddenly, a problem that seems to be very distant in the future occurs right now. And this was really a wake-up call for them to act and to establish an end-of-life supply chain. And I think that we were a bit lucky because everybody thought that our timing with what we are doing or mining is off, like 10 years off. And we said we have to start now in order to be able to have a solution that is scalable when 400 million tons of lithium-ion batteries will be available for reuse or recycling. And we really want to make sure that recycling is not the default because that makes no sense from an economic perspective, but also from an environmental perspective. Coming back to the e-buses, we're talking a lot about e-buses and how we can measure and really monetize sustainability. We are working with one of the largest European e-bus OEMs in Poland, and they're winning tenders now in Europe because they can prove that every battery pack that they get back after 6 years in operation goes into a second life. They can offer their buses cheaper, and they can prove that their CO2 footprint is significantly lower than theirs of the competitors. So this is really the competitive edge that they're now having to win these tenders. Sustainability, second life, circular batteries, they really pay off.
Thank you so much, Patrick. Deeana, do you want to add?
Yeah. The other thing that I think is really important for us to consider is that in enabling secondary storage, and in enabling recycling when we actually should be recycling, we need to be thinking about these. Is this back on? Okay, I'm going to start over.
Okay,
so when we're thinking about second life and recycling, it is incumbent upon battery manufacturers as well and cell manufacturers to be thinking about this trajectory of our product. So one of the things that we're doing is we're developing chip-on-cell technologies that can integrate with our battery management system. We're designing our packs in a way that are more leverageable or usable in secondary storage by being module free, by being cell to pack, by being a high volumetric cell to pack ratio. And that really, it really is a systems cross-cutting mindset that OEMs need to think about as well. You know, in negotiating our contracts, one of the first things that they want to talk about is recycling and path to recycling and the opportunities that we can help facilitate for recycling. But no one is really considering with enough urgency the ways in which we can take packs, understand their life, the safety, the efficiency and capacity in that pack, and move it into secondary storage, and then recycle once we have degraded capacity a significant amount. And if we're not thinking like that right now when we're making these battery packs, we're going to have additional challenges to deal with. And you know, what you're doing is phenomenal, and we need capacity globally to be able to do this, because it's the efficiencies of recycling right now. Right after automotive use, we're not actually leveraging that natural resource in the way that we should be. So I think it is really, really important for us to be thinking circularly across every single touch point, from a chemical level all the way up to microgrid opportunities and other grid storage opportunities.
Yeah, let's go to Vincent first, and then. Yeah.
Please. Okay. Well, from a utility perspective, I mean, the first challenge we have to tackle in this energy transition is to have a cleaner grid. So to have a cleaner grid, you need more PVs, you need more wind, and those are variable. This production is, well, the sun doesn't shine all the time, and you don't have the wind all the time. So basically, the batteries are super important in order to be able, as utilities, to provide the service when you want it. Because in the morning, you don't wake up and say, I'm going to consume 1 kilowatt hour. You just flip the switch and you expect electricity to be here. So we need batteries, and why buying brand new batteries and with all the impact that we have on the mining, stuff like that, and why not use second life batteries? So, you know, utilities are very risk averse enterprises. So we have a couple of years, as you mentioned, to work on that and do 2 pilots and to understand the impact of this technology and to integrate those second life batteries on the grids. And I think it's key to have those discussions and see how we can do things so that we can minimize the impact of those technologies and well, reuse them as much as possible. And I know that now I think in Santiago in Chile is planning to use their batteries in order to minimize the demand side of the billing, because obviously having fleets, it means a lot of buses or cars charging at the same time, and from a grid perspective, it's difficult to handle, but there's a price to it as well. So batteries, second life batteries, reusing them, it makes sense on the business case of those projects, and we need to take that into account whenever building fleets and stuff like that. So
Go ahead, Erik.
Yeah, I don't have much else to add. I guess my one practical thought is that I have an EV that sits at home being used 5 to 10% of the time. That's a bit strange because that asset is literally useless 90 to 95% of the time. And that seems highly inefficient to me. This is perspective. So even before getting to recycling, which is you got to do, can the assets have a better value to system? Yeah, and are more effective to system to be used, because otherwise they're like stranded assets half the time, just sitting there doing nothing. Yeah, it's more of a thought. I don't have a solution for it, but it's
well, maybe I can give you our perspective on that. Obviously, we've been talking about V2G for the past decade. But if you want to use that properly, you need to have intelligent grid. You need to have the technologies. So you're now 10 years later, and we're seeing that integration of technology and being able to use V2G as an enabler. So yeah, you're right. 90% of the time your car is parked in your garage or in the parking lot. So those are batteries that utilities could use, and you could get paid so you have a strength. And it generates great value for utilities, and we're willing to. Most of our partners are willing to pay for that as well. So it's a matter of building the market and building the infrastructure, because and then yes, those cars staying in your parking lot will be useful. And the other aspect is the question we have to ask ourselves is can we just swap ICE for EVs? Or we need to do something different, because at the end of the day, 90% of the time they're standing there. So we need to also optimize those elements. So optimization of the grid, of usage of EVs and all of second life batteries. It's key to this transition.
And then the robo taxis.
Well, you know, I think some of the work that you're doing in Africa is great because it gives us that use case, which we desperately need. You know, we need use cases where there's actual tangible proof, because from our first conversation we had a few weeks ago, I found it very interesting that you were going after what I would call a niche modal split, but with a really revolutionary, separating the battery from the actual moving asset. And that's the mindset we need from the supply chain. And, you know, we've got private capital here that you know, that can fund and separate those two different asset classes because they behave differently. And, you know, Erik, can you expand on how you see that vision playing out in sub-Saharan Africa?
Yeah, I can. It kind of addresses that usage of battery capacity in a way, because like in our particular use case, we see the battery doing most of its work in electric motorcycles, and then is doing backup work to provide like power at homes and things. So it's multi-use. That does have a lot of technical challenges because you need to make sure that this battery can drop into all these different use cases, shake a hand with a BMS or whatever. So there is at scale, there's a technical challenge, but that can all be overcome. I think the bigger one is the actual financing of the infrastructure at scale, because this is small scale distributed infrastructure. So if you're taking a single battery, let's say that is like ours, are 2 kilowatt hours, 10 to 14 kilograms, or tiny things. I don't know what they're worth, $500, let's say, out of factory. You ideally want to finance that as though it were infrastructure. So, you know, it's leveraged. But there's a lot of complications to do that well, but I think it's needed to get the scale there. So infrastructure players ideally can finance in the same way they do large-scale wind farms, small-scale distributed asset facilities. And you kind of have examples of this in Africa via pay-as-you-go solar, but none of it is large enough yet. So I think Africa is a very unique use case, because the reason that battery also works is that like power consumption in an average African home is about 500 kilowatt hours per year, so 10 times less than you have in the UK. So a single battery of that size can almost do 1.5 days of full power for a home, whilst also tackling mobility needs. But you know, when you prove it there, could you have a similar model coming back to Europe? Potentially, and then you don't have to invest in distribution wires anymore. It becomes like an operating virtual network of small scale batteries. I don't know.
So microgrids, you know.
These are like tiny little
micro. Yeah. So let's get Anthony's take as the guy with the purse in the room. So how can we make this vision happen? Because there's talk, but we need action here, Anthony. How can we deploy that billions?
Yeah, look, I was just, I guess, going to say, I'd echo, you know, much of the comments that have already been mentioned on this particular subject. I think what's, I guess, really interesting about I guess, battery storage, and this is battery storage in an e-mobility context, and also battery storage more generally in a, you know, in behind the meter and grid scale storage applications, is the ability to basically use them for multiple use applications, and therefore drive multiple revenue streams. There was some mention of vehicle to grid, and you know, that's getting a lot of airtime here in the US around the school bus fleets. There's a, you know, very large, I think, you know, more than 500,000 school buses in the country. And the use patterns of the school buses are such that, you know, they pick up children in the morning and drop them off in the afternoon. And they're sitting idle for a good chunk of the day. And, you know, in power markets like California, where there's a pretty significant duck curve problem, given the generation mix, you know, they're actually quite effective in providing backup and stability services to the grid. So I think thinking outside the box in terms of multiple use applications, you know, for batteries, and batteries in an e-mobility context is really interesting, and it's also important, I think, to kind of maximize the potential and the value of these assets. The last thing I'd mention is around, I guess, another innovative kind of financial product in this space, I think, is battery leasing programs that I guess some other financial institutions in the space have established. And that's, you know, they've been, I think, quite effective in terms of reducing upfront capital costs for fleet owners, because the battery, as I think most people will know, is the most expensive kind of component in the kind of broader kit of an electric bus. Innovative financial products, such as battery leasing programs, can, I guess, spur capital investment because it reduces that upfront capital costs and brings the capital costs in line with a more traditional diesel bus. And often that's an impediment to investment in this space is the difference in upfront capex for an electric bus versus a traditional ICE bus. So look, I think they're the 2 points I'd add to this space, add to this discussion. I think the second use part of it is an interesting one, and I think as this space today is quite nascent, but as the space gets, I guess, more popular and more appetite from the investment community, obviously, the market gets more competitive. And that's when, valuing kind of things like residual values and second uses of batteries will be a differentiator between kind of winning and losing a project in the future. So that's something that I'd say is important to be thinking about and watch that space for the future.
That's great. There's two topics that came to mind when you talked about the yellow school buses and the fact that they can do vehicle to grid balancing in a big way, because they are very peak transport, morning peak and afternoon peak. And then the second thing around TCOs and leasing. So as someone who's focused on total cost of ownership and has looked at it, in most of our cases, we find we're 5 to 10% to an ICE vehicle. But if you were to take that battery pack out of the equation and make it as a charging as a service model or charging cycle as a service, that's where you would see some really innovative solutions and work that Patrick's doing around second life and monitoring. I think would work great in these battery packs and these vehicles. So let's take the first topic around total cost of ownership. How do you think the next few years we can accelerate, balance, or make it more attractive? We do have the carbon credits. That's a government incentive, but how can we physically dollar for dollar make it better? So why don't we start with Vincent?
You always ask the questions the guy doesn't know much about it. No, I'm kidding. No. How can we make that? I mean, more project, the more car, the more batteries. Obviously, there's going to be a decrease in the price of batteries. But in order to get more vehicles on, I'll talk maybe a bit more maybe on human capacity building. We've done work together in Lima. You've talked about those drivers wanted to drive those buses, and it's so basically by doing a project like that, you're convincing fleet owners to look at that market, because it's not even from a business standpoint, it's almost working, but I mean, all their drivers are pushing the owner to go there because it's a fun thing to drive. Then the users are so happy about it, and this, so you generate momentum, and then people are starting to buy buses. And in LATAM, I mean, they're very active on the fleet side, and I think it's projects such as those that are helping creating the movement. And so with more EVs, more buses, then you decrease the prices, and then the economy is going to make sense at the end of the day. On the utilities side, maybe more, and then there's a question of how we want to do the rate structure. Can we, as utility, change a little bit the way we do our stuff and come up with rate structure that would incentivize the integration of battery or EVs and buses. So there's clearly stuff to be done, and then obviously relations. I'll come back to relation with governments and cities and stuff like that. So it's people working together in order to minimize the different hurdles that we face when we want to integrate those elements. And utility is a big part of it, but we cannot do it alone. So.
Those are great points. We are going to have a session later on today about the Lima, Peru case study, and what I think is proofs in the pudding. And what it did is it gave a replicability report and outputs showing that this is not an if, it can be done. Those are really good points. And talking about the utilities, just to pivot the question a little bit, is that there's so much innovation in the utility space that can be done. Vincent, coming from Hydro Quebec, I was on a due diligence where we were looking at kilowatt hours per kilometer, and the utility was actually absorbing the risk of the energy efficiency of the vehicle. And I thought, wow, that is something totally new. Imagine if you were just doing it as a kilometer as an odometer. Don't worry about how much energy you have. We will take care of that. And I think those are the type of examples that are revolutionary. So I would love to hear from others of what they're thinking in terms of this innovation. Patrick, why don't you go next?
I can't say much about the innovation that you were just referring to be very honest. Maybe I can say two things about the TCO issue again. Talking about circular assets, usually what we're meaning by this is squeezing more dollars out of the asset over its total lifetime. And in the case of batteries, we have to prove two things, right? The first thing is that can we actually squeeze out more revenue out of this asset, and can we lower the component cost for the OEM, which we could prove. We can prove that based on a sample of 17,000 traded electric vehicle batteries, that we can lower the component cost by 20%, which is crazy high, given that OEMs usually negotiate for cents with their tier 1, tier 2 suppliers. And suddenly we can lower the cost of their highest valued component by 20%, which is crazy. And the second thing that we had to prove is, do batteries that are used run safely and reliably in high-performing battery energy storage solutions? And based on the sample size that we have, we can prove that, yes, they are super reliable. And based on that data, we could even make them now bankable, financeable, and insurable. And this is really a game changer to how can we make batteries truly circular by giving them a second life. Sorry for coming back to that topic over and over again, but I find it overlooked.
Why don't we have the battery person on the panel jump in?
I'm also going to take it back to total cost of ownership. So sorry, Naeem. I want to talk about chemistry, because when you think about the supply chain, and also reflecting on what Uday said in the previous panel, we have to look for new supply chain opportunities, but part of that is related to chemistry and developing new chemistries. And when I look at chemistry and energy density and chemistries that have achieved high cycle life capability for automotive use, that's a market-led phenomenon. There is chemistries that have not been touched since the 80s that are ripe for innovation. So that's one of the things that we are doing, is looking backwards and saying, what are those sustainable cathode material opportunities that we can explore from a chemistry perspective in order to innovate, stand up new supply chain mineral opportunities that builds capacity, that gives you eventually lower cost if you're divesting the different minerals you're looking at. And then the second thing is that we have to push the needle on what these vehicles can do in terms of energy density. So we're working to double range in one of our architectures. Gemini pairs two different chemistries together. And by doing that, we have a LFP traction component of our battery that can take the daily use and abuse of daily driving, but then we can leverage an advanced energy storage technology for range extension. And in a consumer EV, you could be talking about 800 miles of range that now the people who didn't want to adopt are saying that seems like better technology writ large. And then you're also offering the opportunity to take some more advanced chemistries and bring them into the market in a way that we haven't been able to do before. It even unlocks the opportunity to leverage, say, supercapacitors in an automotive use. And then those packs, can go into secondary storage, can go into and then end of life, we can put them into a circular economy. And then I look at, work like what you're doing, and this type of technology has an impact on emerging markets, because if we have needle pushing technology that can be debuted in European and US markets in terms of EVs that are going to take someone 800 miles and maybe the price point is high, that technology on a smaller scale could give you maybe 30 days of power for a household. And then that's democratizing energy. And then we're powering humanity.
There, Erik, go ahead.
Well, yeah, your point there on kilowatt hours per kilometer. It's funny. That's one of the things we're grappling with at the moment, is how we price the energy used from the batteries. Because in our model, the TCO is a day one positive. Like we can sell a motorcycle in Ghana today, priced competitively against a petrol motorcycle. It's just a frame and motor, but it accelerates faster. It has a lot of benefits. It's not as much noise, not pollution, all those things, and it's price competitive against a petrol motorcycle. If I then price in the battery, or let's say battery as a service type model, it's cheaper than petrol from the pump today. So immediately the customer benefits. Roughly, we think it's 10 to 30% benefit on fuel cost with the same cost of a motorcycle. That's today. So there is no even need to engage a TCO conversation with the customer. It's just better off the bat. And if you then get these techs that can, this chemistry and technology that can elongate range, I mean, suddenly you're just, I mean, petrol is done. Like it's, yeah. Like make the, yeah. I mean, so for example, with the cells, we're looking at, we'd get about 120 kilometers for a 2 battery pack, whilst the petrol's at about 200. So it's not quite there, but we solve that via swapping stations and things like this. You can still make it work, but once you get range going even further, I mean, there's just, I mean, yeah, that's amazing. Anyway, but anyway, the TCO thing, it works today in certain use cases, and definitely in Africa for our customer base. So.
That's great. Why don't we get Anthony in here into the conversation? Anthony, what are your thoughts on this TCO question?
Yeah, thanks, Naeem. Yeah, look, I guess coming at this one again from an electric bus angle and a capital provider's angle. Look, I see capital to unlocking, the power of TCO. So in the electric bus space, in many markets on a total cost of ownership basis, e-buses are, approaching or already competitive with traditional ICE buses from a TCO standpoint. And I mentioned it before, but notwithstanding this, there's still a really big impediment, to fleet owners in investing in electric buses in many cases. And the reason is, as I said, is the upfront capex is obviously much larger, for the initial outlay to purchase e-buses versus diesel. That's where capital can provide a role here, because, a capital provider such as ourselves that, it is our business model to own, asset heavy, businesses and invest in infrastructure. We can reduce or even eliminate the upfront capital costs, and I guess turn that cost into an ongoing, sort of running costs over, 12 or 15 years in some cases in terms of, entering into a long-term contract. And so that for fleet owners, which are often municipalities or, sort of government departments that own kind of large scale fleets and municipal buses and all the rest, often are cash strapped, and we're just sort of coming out of a pandemic. Obviously, public balance sheets are stretched, and that's often a reason that purchasing the cheapest kind of replacement bus is the easiest, notwithstanding that it might be in line with or even more expensive on a total cost of ownership basis. But capital to basically neutralize that upfront cost is really important to the rollout and to the growth of this space. And what's important to make that all happen, as I said, is effective procurement models and well-structured projects to basically mobilise that capital, to play that role that I'm mentioning. So that's kind of the perspective again from an electric bus angle and also like a capital provider standpoint on the TCO question, Naeem.
Thank you so much. So I got another question for the audience as well as the panelists. How many of you today are driving an electric vehicle? So 1, 2. How many of you will be buying your next vehicle as an electric vehicle? Okay, so we still have work to do in the room. So, okay, yes, that was a good one. Yes, how many are cycling? Okay, there we go. Yeah, that's good. Yeah, there we go. Yeah, that's an interesting question. So, one of the things that we've talked a lot about heavy duty fleets, we've talked about school buses, we've talked about public transit, but a big portion of that is the private consumer. So what do you guys think would help to push them over the edge? So, we've seen in this audience that there are people interested in looking at EVs. For myself, I'm looking at the Audi e-tron GT for my next vehicle. I've been very loyal to Audi, so I've been waiting for the technology to catch up. So, but what about your stories? Like, where are you guys? Like, what do you think will help the consumers? And I won't go on Vincent first. So,
On that one,
you could? Okay. All right. So we'll pick on Vincent. There you go.
I'll take it from a different perspective. Instead of me personally, most of the time we talk about problems that we have in the north, and I'll go maybe more in sub-Saharan Africa or Latin America. There's a huge push for Audis or GM or whichever company you want to choose for EVs. But it's good for people that have a lot of money. And then if you go to Africa, you go to Latin America, you go to Asia, it's motorcycles, it's tripods, it's not cars, and there's a clear lack. There's a couple of startups in India, there's manufacturers of that, but there's not enough emphasis, I believe, on those technologies, because if we want to do energy transition, it's not about just the north, it's also about Africa, South America, and all of those, and we need to work on that. So it's not about maybe my next EV, which I haven't chosen yet, but it's about how we can maybe also help those companies to and provide those kind of services. So I do believe it's important. And in Africa, there's 600 million people without access to electricity. So those types of battery swapping technologies are clearly helping along to facilitate the access to electrification and in e-mobility in general. So different perspective, but I hope it's a...
Go ahead.
I think as Uday Kemkar rightfully said, sticker price still matters. So if the prices will go down, there's a high likelihood that people will buy all sorts of electric vehicles, being it an Audi e-tron or a Neo or a Xpeng or whatever vehicle. I would really call OEMs for more creative ways for pricing and business models. So as opposed to many who think battery as a service is a great thing to do, I think in the mobility sector it is not, because for every vehicle you would need additionally 3 batteries, which is nuts from an economical perspective. Why not using a pricing vehicle that we all know and have, which is leasing, and building on top of that using vehicle as a service, long-term rentals and things like that, which would make electric vehicles much more affordable. And I do really love that business model in just renting instead of owning, because this is a highly sustainable pricing model.
It's really interesting. I drive a hybrid Toyota Sienna. I have a 2-year-old. So the van is almost an imperative. But we drive back and forth from Toronto right now, and the range problem is a problem. Like, we can't do that drive on a single charge easily and a car seat in a Tesla. So to me, it's doubling the range, and it's enabling these larger vehicles also for the North American markets in particular to be able to be electric and still have range without giving soccer moms range anxiety.
Yeah, I think in the Western world, it's definitely just a price thing or business model thing, I think. But I think on your point around the battery as a service, have you heard of Gogoro out in Taiwan? They are actually running on their battery swapping network reserves of less than 1.5 per battery. So it's quite low actually. So the economics work on the battery as a service, but it's because the batteries are also used a lot. But I mean, I guess I think that it is a cost thing. I mean, right now an EV is a luxury. They just perform well. Like I love the fact that my Tesla can beat a Ferrari on the road. I mean, it's pure luxury. But if you're looking at, if you're an adrenaline junkie, you got to go electric. Like there's no other choice. There is no car on the road that's beating you today. No chance. So yeah.
So I'm guessing you're watching the YouTube videos where that Tesla guy drives Ferraris and races with all these high-end performance.
Yeah, I mean, boom.
Yeah.
Yeah, I try and roll up against them against the traffic lights, you know. Yeah.
There you go.
Watch me. True, yeah.
Anthony, your thoughts on this one? And
yeah, so
electric vehicle.
Yeah, I drive a Toyota RAV4 plug-in hybrid. So it's the new prime model that came out this year in 2021. And the reason I went plug-in hybrid, versus full EV, it's I think as Deeana mentioned before, it's the range anxiety question that the equation that still hasn't been solved as yet. But I get close to 50 miles of pure kind of battery EV range out of this car, and that does the job for probably 70 or 80% of my trips, which is fantastic. Look, a couple of things I'd say is that there's quite generous tax incentives in the US anyway to try and spur purchase of electric buses. So I think I'm qualified for a $7,500 kind of tax rebate next year because of my recent EV purchase. I think that's only set to go up with the recent infrastructure bill and some more funding to spur EV rollout, which is important. And there's also, I think, money set aside, a good portion of $7.5 billion to invest in a greater charging network across the country as well. And that will be obviously the key to addressing the whole range anxiety question, which I think for now is still an impediment to consumers purchasing cars. Look, what I would say though is it's very encouraging signs. So we probably all saw during the pandemic, purchases of car vehicles generally kind of fell off the cliff. But purchases for electric vehicles actually surged. So I thought that was a very interesting kind of set of data points. And I think with the right kind of government programs and incentives, I think there's going to be a huge kind of trend towards electric in the coming years.
Yeah, that's a great point. Just on incentives, I think that's one thing that we need more of governments to bring forward. Incentives. There's a direct correlation with incentives and EV uptake in a market. I was reading an article recently about how a lot of electric cars are pricing themselves at $49,500 in Canada because if they're above 50,000, they'll trigger no incentives. So, but you can't buy the $49,500. You buy the option one. So, there is this gimmick happening around incentives. But I think the point is it's a shift, and we need the governments to come forward with actual robust incentives, and even the utilities. Vincent, what are some of the things that GSEP is looking at behind the curtain? If you could speak to help with incentives and push forward adoption on the private vehicle side?
On the private vehicle side, a couple of things. ADF is I won't be able to quote it but they're working top to bottom on their transition as a utility, meaning they walk the talk and they want to convert the entire fleet of vehicles by the end of 2030. And then with that momentum, they also generated credits for their employees so that they could buy EVs. So that's one example of a large utility doing the first thing they're doing is getting rid of their ICE as their own vehicles as a fleet, but then subsidizing their own employees. That's one of the elements utilities can do. It's one of those examples. Obviously, what we can do is also as utility for the private customer is remove some of the barriers. So multi-unit dwelling, what do you do if you want to charge? So as utility, we can come up with programs to facilitate the installation of those chargers. We can also facilitate the installation of DC fast charging to remove range anxiety. And I'll come back again to collaboration with municipalities. If you don't choose the right location, the cost of installing those chargers is going to be prohibitive because the infrastructure wiring is going to be civil. As soon as you're pouring cement, it costs you a fortune. So you need to address that, and you need to look into those different elements. And I think utilities have a huge role into that. I don't know all utilities want to subsidize their employees, but some of them are doing it.
That's a great point. Leading by example, and I think utilities and themselves have massive fleets, and I've seen a lot of press releases with Lion Electric, a Canadian startup that is partnering with various utilities, building bucket trucks that are fully electric. It's a great example of how you can get confidence. I've had experiences with the utility staff, and had those conversations, and some of them don't even get behind electric vehicles, in the sense that the day-to-day people that are actually making sure you're getting power and maintaining those transmission lines. But when they get to drive these vehicles, you're changing minds, you're letting people see that. So I think Vincent, that's some really exciting and fascinating stuff on that. So we're coming to the near the end of our panel, but I did want to invite anyone from the audience who would like to ask questions. Please. Do you want me to come up and I give you the mic?
Thank you. Hi, Richard Taylor from Green Lithium. Really interesting panel. We talk about range anxiety, the lack of infrastructure, and saying that infrastructure will inevitably reduce the range anxiety. That's fine, but once we've got over that, the big question I've got, and I feel that the elephant in the room here, is battery prices in China at the moment have just raised 20%, directly due to the lack of natural resources that we're putting into the batteries. This is looking to only continue as there's a lack of investment in the upstream of the supply chain, particularly in the mines, then also in the processing side of things. We talk about the problems from an infrastructure point of view, from a range anxiety point of view, but are we addressing the real key one here is that are we going to be able to make those batteries to go in those electric vehicles? And once we've done that, what's stopping the battery manufacturers going after what is coming and seeming to be a much bigger market than EVs, which is the stationary energy storage market, where they can get bigger, fatter margins for their batteries in, and they're not squeezed by the OEMs on that? Thoughts?
Great question. So why don't we hand it over to Dee to start it off?
Really great question, and I'm very interested to understand what you guys are doing more. I think it comes down to having more chemistries leveraging different minerals like manganese, and lithium and iron phosphate and nickel and cobalt in certain settings. That's, I think, number one. Number two, battery manufacturers should not be operating in silo from, people like yourselves who are working on the raw material component of the supply chain. One of the slides that I show legislators very often illustrates that, even if we are doing 7% cell manufacturing globally in the US and maybe 18 in EU, you look at extraction, refinement, and anode and cathode production, and that is completely housed in a singular supply chain right now. And so we have to divest that. We have to invest in more sustainable extraction. We have to invest in more sustainable refinement. And we have to invest in more precise and sustainable anode and cathode production as well. Because actually, as a non-chemist, you look at what cell manufacturing is, and it's like an art with thousands of confounders. And there's no, I think it's still archaic. There's a lot of opportunity for investment publicly and privately in improving our actual unit of energy storage across all partners, because ultimately it is another natural resource, and that's the risk here, is when do we exhaust this resource? And so we have to be strategic now.
Great point. Dee, do you want to hand it over to Erik to get his take on it?
Yeah, I think it's a fascinating question. Let me think about it from a perspective of grid scale storage in the UK today. That increase in lithium, if it were spot priced against power prices today, doesn't matter because the revenues are so high. But nobody is actually hedging out the underlying cost of the batteries against the revenues. Like, it doesn't work. So they procure from factory or the OEMs and they get the assets on the ground. What I think is fascinating, it probably doesn't quite answer your question, but a battery actually is kind of like a spread between your underlying chemistry material costs and the power price. And if you could start trading your underlying commodities as a buy to hedge out the price point, and then you can kind of transact that against your power element, maybe that helps to put capital into where it should go. Because today it doesn't work that way. You kind of procure your batteries many years in advance of a revenue you can't see until you're finally there 2 years later. So I think there's an inefficiency in terms of how these assets are optimized today. Oil works better because I can trade it 10 years out and then trade my power 3-4 years out. I can manage it better. So I think the second part is, I don't know if it helps, but it would definitely create better transparency on pricing on the raw materials side. It hasn't been created, exactly. So you can't hedge, but somebody should bring that out. Yeah, because then you can have traders starting to really put money to work into the underlying in the right way. I don't know. Yeah, but yeah, point.
Let's get Anthony's comment on that. What do you think, Anthony, on what Erik's saying here?
Yeah, look, I don't have a whole lot to add, to be honest. I guess what I'd say is, I think as probably lots of the people in the audience and definitely the panel would know, battery prices have fallen around 90% over the last decade. And it's that kind of steep declining cost curve which has, brought kind of electrification to the forefront today, and it is absolutely key to I guess to the continued growth prospects and future prospects of this space. So I frankly don't have the answer to the original question, but other to say that it is very important, I think, that the declining costs of the battery component of these vehicles continues to fall, because that is what that is why we're, as I said, approaching kind of parity on a total cost of ownership basis, and that is what is going to continue to drive growth in this space. So ensuring there's access to I guess competitively priced raw minerals and effective supply chains and all the rest, I think is absolutely crucial.
Thank you. We have another question.
Hey, my name is Muzz. I'm a lifelong student of capital markets. So thank you very much for your cross collaboration. I had a ha moment that kind of just went off. And I want to address all 3 points on how to unlock potential capital. It's not about unlocking capital, it's about unlocking the right capital. So for utilities, do they still have a spinning reserve that is set aside for debt remediation? For utilities, do they still carry a spinning reserves on the balance sheet for debt remediation? So my understanding of the utility side is that if there's a brownout or blackout situation and they have to get that energy from a different market, every year on the balance sheet, they have to set aside like $25 million or $30 million. And then they take that debt remediation over 30-year amortization and pass it down to the consumers. So if you have a storage level component where you can reduce your debt remediation, can you take 10% of that capital and put it in towards infrastructure development on a local grid development? It's just an idea. I just want to put it out. Another way to unlock potential capital as a student of capital markets, let me just pull up my notes, is on the balance sheet. So you have goodwill, right? Goodwill is hypothetical. Coke has a goodwill value of a couple of $1 billion. Is there, this question for Anthony, is there a potential of adding ESG goodwill? So corporations have a bottom line incentive of driving towards ESG, but recognize that as an asset, as a goodwill is, because goodwill is hypothetical. You could have a $1 billion write-off of a goodwill in 1 year, and you could have a $2 billion write-up of a goodwill next year. So why can't that also be done with ESG? Just a thought of unlocking capital. But I would like to hear your perspective if you see this kind of component coming into the balance sheet.
Yeah, I guess from my standpoint, very kind of interesting idea and observation. You know, frankly, who knows? And this is getting into, I guess, the weeds of accounting, which it's been a few years since I've been into the weeds of kind of, you know, goodwill's entries on the balance sheet. I guess the way I'd respond to that is that innovation is key to this whole space and the growth of this whole space. And we've talked about innovation in the context of financing models for batteries, second uses of batteries, you know, vehicle to grid. But innovation is not kind of, I guess, you know, specific to, you know, to those kind of technical components of the value chain. Innovation in, you know, accounting methods, you know, could also be part of the solution. So I think it's an interesting observation and one that's kind of worth further exploration.
Excellent. So maybe, Naeem, we could get the International Financial Regulatory Standard Board and the GAP on board to also kind of help orchestrate an alchemy on the financial ecosystem so we could add value. So bottom line, companies could see value. Awesome. And my last question is for Erik on the retail trading. So as a former trader myself in the commodity space, I know energy is a wholesale market. It wasn't available to the retail. Enron created this market, and then the whole issues with their accounting came up. But now when you have blockchain and cryptocurrencies that allow you to define valuation on a granular level where you don't have to do it on a currency level, but you could do it on even an energy level, it democratizes the access to retail traders. So I do think this solution is going to be available to allow people to maybe do a vehicle to grid in a local neighborhood. You know, so you have energy level storage, like the storage components that they're creating, but now you drop these storage units all around the places. And if you have like 10 houses that just feed that storage unit, and that's connected to like some cryptocurrency, that's connected to their stable coin, that's connected to their valuation ecosystem, now you give the retail participant the access, and all you need is a phone. And everybody in Africa actually has a phone, because that's one thing I think the whole world kind of spread around in the last 10 years. So just coming back to the conversation, you know, I had a lot of correlations that I connected given my last 13, 14 years in capital markets and in commodities and derivatives trading. And I think there are solutions to unlock the right capital, because when you go to the VC, they have a different intention. They want to get an exit 5 to 7 years, but this is not a 5 to 7 year problem. This is a much longer problem. So you need to get the right players in the room who have a different intention in solving this problem, not just the capital gain. So I just wanted to leave some food for thought, my 2 Canadian cents.
Thank you.
Thank you so much, Ms. Zammel, for that conversation. We're coming to the end of our panel, so thank you so much. Please stick around. We have many more events throughout the day. It's Transport Day, so thank you once again to everyone. A round of applause for our panelists.